Well, I think we've seen the rally in anticipation of a supply disruption of about $5 a barrel. But should we actually have Russian oil supplies cut off to Europe, which is 3 million barrels a day, we could see oil prices rise another $10 to $15 a barrel, putting Brent at about $110 a barrel.
$110 a barrel. You know, that's something that not only would the world hate to see, but particularly massive oil importers. And I'm thinking of countries like China. It doesn't want to see $110 a barrel. So how might that potentially impact any involvement by China in that political fray?
Well, I think they would be concerned given that they're importing over 10 million barrels a day. And as the price of oil goes up, of course, that's taking purchasing power from consumers. And along with inflation in the oil markets, we have inflation in the agricultural sector as well. So as prices rise, what China is faced with is higher energy costs with less purchasing power from the consumer for the goods that China produces to sell around the world. So they may not escape from this unscathed either.
No, not at all, Andy. And that's getting reflected in agri-commodities as well, you're saying, which, of course, you know, whether it's soybeans or other agri-commodities, China is a big importer of all of that.
Right. So the Chinese domestic consumer is going to be impacted by the events that are happening in Ukraine. And one can see how these events are really affecting economies on a worldwide basis.
Yeah, I just want to understand, Andy, how, I mean, I know you're saying 110, but, you know, there's also talk about additional supply coming to the market if the Iran deal happens, fructifies. So, you know, would there be some sort of a balance that would kind of bring semblance to the market at all, or is this a one-way street?
Well, it's not a one-way street. The market will rally on an invasion of Russian troops into Ukraine proper, and then it's going to wait to see where the resupply comes from. As you mentioned, we still have ongoing negotiations with Iran that could add between 1.3 and 1.8 million barrels a day. Keep in mind, the total loss of oil to Europe would be about 3 million barrels a day. But beyond Iran, what the world would actually look for is Saudi Arabia, the United Arab Emirates, and Kuwait to utilize some of their spare capacity, which I estimate to be about 3.5 to 4 million barrels a day. And it is until we see those supplies come on the market will it take for a tempering in oil prices.